I have spent the past year running many experiments over multiple accounts on Darwinex, and I am happy to announce I have finally cracked the Darwinex algorithm and tricked it into doing what I want. Hi, if you're new here, I'm Lisa, and I've been trading with Darwinex for the past 14 months, and my account LFY is currently in Darwinex Gold, and I've received $255,000 in total allocation, and I've received multiple payouts from Darwinex. Now, Darwinex is a platform where traders with limited funds can trade and be rewarded when investors invest in their strategy, or Darwinex gives them allocation. Between the trader's account and the investor's account is the Darwinex system, and the Risk Engine is part of that system. Unfortunately, I've received many comments and complaints from my viewers talking about the Risk Engine and how it sometimes seems to give negative returns on their Darwinex account when their real account is actually in profit. Now, the purpose of the Risk Engine is twofold. If your trading is too conservative, then the Risk Engine will boost your multiplier. However, if your trading is too aggressive, the Risk Engine will reduce your multiplier. Before I show you the results of my experiments, let me explain the broad two types of strategies that I've seen in expert advisors. The first one is low risk strategies, where you have a single trade with a take profit and a stop loss. Very straightforward. The other one is a high risk system, where instead of a single trade, there might be multiple trades and they all sort of work together, and potentially many of these systems don't have a stop loss, and these are called grid martingale systems. With low risk systems, the equity chart can be quite jagged, like this example here, and when they are jagged, sometimes you'll have long periods of stagnation. For example, here we can see in November of 2023 till April 2024, so about a 5-month stagnation period when there are no higher highs being created in this particular account. Whereas for high risk systems that employ grid and martingale, like the atomic trader, the balance line is generally pretty smooth and upwards. However, you pay close attention to the drawdown, and the drawdowns for these type of expert advisors can be quite high. We can see here, according to FX Blue, on this account we saw a $2,500 drawdown back in July of 2024, and currently there is a floating profit and loss of negative $933. And the Darwinex Risk Engine generally does not like high risk expert advisors. On the screen here, I've got 3 charts. Up the top is your trading account, in the middle is your Darwinex index, and at the bottom is your multiplier. This is typically what a high-risk grid martingale account will look like. Let's say you start off trading for a month or a few weeks, and you can see your account slowly inches up with a few small drawdowns. However, because you know that this is a high risk system with big drawdowns, you are trading it on small lots. But the Risk Engine doesn't know that this is a high risk system based on the current trades. So it sees you trading small lots and it says, hey, you are trading too conservatively. I haven't seen any big drawdowns. Your trading seems okay. So it gives you a high risk multiplier. And as you continue trading your high risk system, eventually everybody sees a reasonably big drawdown. And we can see that in the example here, most of the time it is trading with reasonably low drawdowns, but we see a huge spike here in July 2024. And the multiplier will react accordingly to protect investors. You can see in the chart below, we've gone from a high risk multiplier and jumped straight down to a low risk multiplier. And even though your trading account will potentially survive this drawdown and come back with all-time highs, the multiplier has dramatically reduced. So this is what your Darwinex index will look like. You have this smooth, slow, steady growing profits until your multiplier reduces, and then it almost flatlines. And this line right here is not exactly flat. It does have a slight incline to it, and it is possible to get back to all-time highs. However, this process can take months and months, depending on how your expert advisor performs and if you see any further big drawdowns. This is one of my experimental accounts, which I started back in February of 2024. And notice at the start, you can see a slowly trending upwards movement that is typical of a good martingale expert advisor. However, notice this huge drop here on the 1st of March 2024. So this expert advisor saw a reasonably big drawdown. And I'm going to scroll down and take a look at the risk engine. So on the left here, you can see Darwin live trades. If you click on that, you can see the risk multiplier. So when I first started this account, the risk multiplier was high at almost 3.53. However, notice this sharp drop here on the same date, the 1st of March 2024. It jumped from 3.5 down to 2. So if we go back to my diagram, you can see this picture that I drew earlier is exactly what happened. A high risk multiplier, and then we see a big drawdown and it jumps down to a low risk multiplier. And afterwards, we are expecting the Darwinex index to just flatline. And that is exactly what happened in my own account. You can see this flat period where not much is happening, and it's less obvious from these other sections because I was experimenting on this account. But you can see it much more pronounced in my other account, LFY. Here I am trading a grid martingale expert advisor, slow, steady profits until we see a huge drawdown and almost flat lines. And now I can continue trading this expert advisor. However, it might take 6-7 months, maybe even more, for this account to survive and get back to all-time highs. So I did change up the expert advisors after this point to use a different type of EAs. But what if you like high-risk expert advisors and you want to trade them on Darwinex? So about a month ago, I started a brand new experiment mixing both low-risk expert advisors and high-risk expert advisors. And you can see the results have been phenomenal over the past month. But we also need to keep an eye on the Darwinex risk. So if you pay attention to the past month of trading, you can see the risk multiplier has actually increased on this particular account. Now this account hasn't seen a big drawdown. Let me switch to a different account. In this account, I started off using a low risk expert advisor, and you can see it went into a bit of a drawdown, which is fine and perfectly normal for low risk expert advisors. At about this point, I started mixing low risk and high risk expert advisors together, and you can see the account has gone up and up and up. However, what we also need to take a look at is the risk engine. And you can see when I started this, it was at about 1.92. And Darwinex seems to have picked up the fact that I am now using a high-risk expert advisor. So it has slowly decreased my risk over time, but not too dramatically. And at this point up here, there was actually a $2,000 loss in my high-risk expert advisor. And how did the risk engine behave? Not much difference. So this is a very stable account in terms of the Darwinex risk, and performance wise it has benefited from both the low risk settings and the high risk settings. And the expert advisors that I use on my account is a mix of expert advisor EAs from EA Studio that I create every single week and I send out to my paid members. These are the low risk expert advisors I was talking about, each with a set take profit and a set stop loss. And the high risk expert advisor that I use is the Profit Retriever by Expert Forex. And because I have so many accounts, to save me time, I use Traders Connect to copy from my portfolio 2 over to my Darwinex QNIC account at 0.2 lots. And if I log into my Darwinex MetaTrader platform, take a look at the open trades. So the low risk expert advisors have a 0.2 or 0.3 lots, whereas the high risk expert advisor, I am trading at 0.01 lots. And that's how I've managed to bring this account from -4% to +4% in the past 30 days. And this account has grown from 0.91% up to 7% in the past 30 days. The magic of mixing a low risk expert advisor with big lot sizes and a high risk expert advisor with small lot sizes plus a set stop loss. And recently Darwinex updated their pricing model from $43 a month. There is now a yearly option which gives you an additional 11% off and a 3-year option which gives you an additional 20% off. And as a bonus, if you use the link in the description below, you'll get a further 20% off the monthly fee, or a total discount of 50% on the yearly fee, or a total discount of 24% on the 3-year fee. Now, the risk engine isn't the only thing you need to be aware of when trading with Darwinex Zero. Watch this video right here if you want to learn about correlation and how that can also impact your ability to get allocation from Darwinex. Thanks. Bye.